Before discussing today's meeting, let me comment briefly on recent developments in the banking sector. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector and will work to prevent events like these from happening again.
Greetings, land of Arcadia economics. My name is Dave Kranzler, and this is my bi-weekly podcast that I do for Arcadia economics. Before we get started, I need to let you know that this episode is sponsored by Silver Viper. Silver Viper is advancing its Law Virginia Gold project in the mining-friendly jurisdiction of Sonora, Mexico. You can find it under the ticker VIPRF on the OTC bulletin board in the US and under VIPR on the Toronto Venture. So first, I wanted to just show you a chart of Silver Viper. It's had a very good performance over the last almost 2 months. It's run up from about a low of, I think it was around 5 or 6 cents right in here in early-ish March. And it's popped up to, it closed today a little over 13 cents, and that's on the OTC bulletin board. Obviously, the price is a little bit higher on the Toronto Venture Exchange. And it's sitting here flirting with the 200-day moving average. Now, if the sector keeps moving higher, the prices of gold and silver, I expect that at some point it's going to break free. Some point soon, the stock will break free from the 200-day moving average. And my first near-term upside target is 16. So that would give you, what, 3 over 13? I don't know. That's not a bad rate of return. I think just off the top of my head, it's about 25%, 25%. And a little further out, I think the next target for me anyway, and I do own the stock, full disclosure, would be 20 cents. And that would be a little north of 50% rate of return. I think that's something that we could easily see at the end of the year. And one thing I wanted to touch on is many of you in the audience are aware of the new mining laws that were passed in Mexico. I should say somewhat more restrictive, at least what it initially looks like. You know, if you just look at the headlines, more restrictive mining laws were announced earlier this week by the Mexican government. My interpretation, and I had a conversation with a junior mining company that's advancing what I think will eventually be an extremely valuable mining operation in Mexico. I had a conversation with them yesterday about their take on the law, and I will be going in depth about that conversation in my next issue of the Mining Stock Journal, which comes out tomorrow afternoon. But with respect to how the new mining laws may or may not affect Silver Viper, and again, a lot of details still aren't. The fine print isn't known yet on these laws, but it looks like one of the provisions of the law concerns access to water rights. And it looks like that might be the only provision that applies to Silver Viper. But, you know, access to water rights is not an uncommon issue for companies that are advancing mining projects. And that's no matter where the project is. I mean, it can be an issue in Nevada, let alone Mexico. So, what I have observed over time is that when companies don't get direct access to water rights, there's workarounds that they can do, like they can ship water in and use that. So I'm not that concerned about the new mining laws as it affects Silver Viper. And if you're interested, I will have more information and a longer discussion in my Mining Stock Journal tomorrow. Moving along, I wanted to talk about two topics that came out earlier this week that I look at as, you know, and the general stock market sort of reacted to them. One of them, it sold off and then rallied back. I think these are two potential graveyards that the stock market is whistling by that will potentially crush the economy and the financial system, but that will be highly bullish for gold and silver. The first one is the banking crisis that is unfolding. And the first issue that I wanted to go into, and I'm just gonna pretty much read from the intro to my short sellers journal that'll be coming out on Sunday. So I won't do it any justice if I try to wing it, which is what I usually try to do with these videos. And it's these types of crises happen slowly and then suddenly. And that phrase is famous or infamous from Ernest Hemingway's The Sun Also Rises. There's a passage in there where the character Bill asks his buddy Mike, "How did you go bankrupt?" And Mike responds, "Two ways: gradually, then suddenly." And that's the way this bank crisis kind of hit the system. If you look at, these are charts of Silicon Valley Bank, which is now SIVBQ, and I don't even know why it still trades. This is the chart of First Republic, which this one won't trade, but you can see the market was getting kind of nervous about these banks in a gradual way, and they slowly started to descend in price, and then all of a sudden, boom and boom, there's your suddenly point. And it just sort of came out of nowhere, or seemingly out of nowhere. I actually started doing some work on Silicon Valley Bank around in here, and I knew that they had a problem with the duration mismatch between their deposits, which, you know, those are demand deposits. You can immediately request withdrawal of them, and the asset maturity and the asset value of the assets that back those deposits. With respect to the First Republic deal, the phrase JP Morgan will acquire is deceptive. If you drill into the fine details of the deal, it would be more appropriate to refer to the transaction as a deal in which the FDIC will give JP Morgan a 5-year, $50 billion subsidized loan to assume First Republic's deposits, as well as assets consisting of $30 billion in securities and $178 billion in loans. And based on the latest First Republic balance sheet, the failed bank has about $18 billion in book equity. In exchange, JP Morgan will use that part of that $50 billion loan to turn around and pay the FDIC $10.6 billion for the acquisition, and then repay the $25 billion that was put up by the other large banks a few weeks ago, if you remember, when they all put up some money to try and stabilize First Republic. So JP Morgan is essentially getting a $14.4 billion subsidized loan when you net these two payments out, to acquire $18 billion in book equity. But in addition, the FDIC is giving JP Morgan 80% loss coverage on all of First Republic's single-family mortgages and commercial real estate loans, in total of which represent about 77% of FRC's loan portfolio. But at the same time, JP Morgan gets to keep the debt service payments on those loans. Essentially, JP Morgan is getting the free use of that money the FDIC is lending it. It's a subsidized rate loan to take on cheap capital in the form of deposits, and essentially $133 billion of risk-free mortgage income, mortgage assets, I should say. This is why JP Morgan announced immediately that the deal will be accretive to the tune of $500 million to its net income, and has a 20% plus IRR, and will enable a $2.6 billion post-tax profit that will be recognized immediately. There will be offsetting that $2 billion in restructuring costs, so it says that it'll recognize over time. But that's why JP Morgan jumped 2.1% on a day when the rest of the stock market was just getting absolutely hammered. So the reason this deal is highly supportive of much higher gold and silver prices is it's essentially government-sponsored bailout of the First Republic depositors and a transfer of wealth from the FDIC to JP Morgan. Now, the FDIC, yes, it is self-funding, but it's a government agency. And there have been a few times over, like, I guess the last 40 years, maybe 30 years, where we've had banking crises and the FDIC has been tapped out, and they replenished that first with taxpayer money, and then they started raising the insurance fees that the banks are charged that help fund the FDIC's fund. So, essentially, while it's self-funding in good times, when a banking disaster hits, which is we're seeing the onset of it now, taxpayers get to fund the FDIC. In addition, you've got the government's financial intervention in the Silicon Valley Bank and Signature Bank blowouts. Now, the way I look at these deals is all three of them are de facto QE bailouts. And that's why the Fed's balance sheet ballooned up to $400 billion right after the SVB and Signature Bank debacle. And while it is starting to decline again, at some point that's going to reverse, and try to get into that a little bit later. The second event that is highly bullish for gold and silver prices is the announcement that Janet Yellen made after the market closed yesterday, that yesterday, might have been Monday, I forget, that the Treasury was, because of the debt ceiling limits been reached, the Treasury might default on Treasury debt as early as June. Originally, it was threatened that the Treasury would default sometime in September, October, if Congress didn't raise the debt ceiling or suspend it. But because tax revenues are a lot lower than was anticipated, and that's because the economy sucks and people aren't earning as much money, and spending has of course continued going parabolic, including all the money that the government's spending on the Ukraine war. And so the spending deficit is much larger than anticipated, and thus the Treasury's coffers are being drained a lot more quickly than expected. So it was interesting because the announcement came after the market closed, and I was looking at my screen, and I saw that prior to seeing what caused this, I was looking at my market screen, and the prices of gold and silver futures had popped up quite a bit. And so, of course, I went to one of the news update pages on Twitter, and it was that announcement from Yellen that caused gold and silver to pop up. Now, I think what's going to have to happen here is Congress will either suspend the debt ceiling limit, and I think that happened either during the Obama administration or the Trump administration, or it's going to have to reach an agreement to raise the debt ceiling. Now, eventually it will raise the debt ceiling. However, regardless of how they enable the government to issue a lot more debt, the point is that they're going to have to issue a lot more debt. And quite frankly, I think without risking driving rates up by too much with all the new debt issuance that will be coming once the debt ceiling is raised, I really believe that the Fed is going to have to resort back to QE. So we'll see if that comes true or not, but clearly that announcement is extremely, extremely bullish for gold and silver. And the two events combined, the bank crisis and the Treasury hitting the debt limit, I think at some point when the market realizes how dire these situations are, I think we're going to start to see gold and silver move much higher over the course of the summer. One more thing with respect to the banking crisis nascence is that it has to be true because it's been denied vehemently several times by Yellen, Powell, Wall Street. So there's that old adage that a political or business rumor isn't a fact until the rumor's been denied at least 3 times, and then that confirms that it's true. Well, this has been denied. The banking crisis has been denied several times, way more than 3 times. And in fact, in his post-conference presser circus today, post-FOMC rate announcement conference, Powell once again denied it, sort of in a backdoor way, by saying that the banking system was completely stable. Well, we'll see about that. I have been accumulating some puts on some of the regional banks. I took some nice profits on Tuesday. Was it Tuesday? No, it was yesterday. Yesterday was Tuesday, when the regional banks just got absolutely bludgeoned in the morning. They rallied back a little bit, and I plan to reload a bunch more puts as soon as the implied volatility on those options mellows out a little bit. And just one more thing with respect to my bullish view on the precious metals sector. Let me share one more screen here. This is a chart of the GDX ETF, and you can see it's been in a nice uptrend since, well, really since late September, but for sure since late October. And I think maybe even in the last video, the last podcast for Arcadia, I think I mentioned that I was looking for a pullback in the sector. Well, we've started to get that pullback, and GDX hasn't violated anything technically. But what I really like about this is you see down here where I highlight the volume bars. The volume has been pulling back on GDX, and I'm just using this to represent all the mining stocks generically. It doesn't apply to every single individual stock. Clearly, Silver Viper has been outperforming GDX over the last few weeks. But you see the volume's been tailing off rather quickly during this pullback in GDX. And I'm not a technical trading expert. I know, the basics, but it's actually when a security or an index is in an uptrend and it's in a down, in a pullback cycle, declining volume is actually extremely bullish, and it actually suggests that the selling energy is starting to lose some momentum. And when that happens, we'll revert back to a market condition where we'll have more buyers than sellers, and that'll drive this index up even more. So I put my money where my mouth is, and in terms of my conviction with where the precious metal sector is going higher, I took delivery of more Silver Eagles last week, and I just ordered some more yesterday. One of the bullion dealers had a sale on one of the major sovereign minted bullion coins, and so I bought some more. I just can't refuse a sale. And to compound this, the banking disaster that's unfolding, and the Treasury debt ceiling limit and the coming massive increase in Treasury debt issuance just adds rocket fuel to the potential bullishness of this sector. So that's enough for this episode. I sincerely hope that I haven't put anyone to sleep. And with spring coming on, I hope between this episode and the next episode in 2 weeks, I hope everyone gets a chance to pull themselves away from these stupid podcasts and their market screens and gets out to enjoy the spring weather. It's mid-70s today in Denver, and as you can tell, I'm getting ready to go play some tennis. I'll see everyone in 2 weeks, and hopefully I'll be sporting a better tan, and I hope everyone out there is too.